right now, so I'm just going to go and start today. Welcome to the webinar. My name is Kiana Danielle. I'm the CEO of InvestDiva, and today we're going to have a live overview on the EU referendum and see how we can potentially take advantage of it, or should we even try to take advantage of what is going on at the moment. So first, before we start, I would like to have this on the screen, the higher risk investment warning. This is not something that you should worry about, but just what it says is that you need to be aware that trading on margin can result in losses that may exceed your deposit funds. So before you decide to trade, please be aware of your funds and your risk appetite and your risk willingness. Obviously, we do have a full course on risk management on investiva.com. That is actually coming up. So if you'd like to get on the waiting list for that, definitely do go to investdiva.com and get on the waiting list for your financial planning course. All right, so today we're going to talk about, well, we did have a webinar on Brexit last month, but if you didn't get to attend, there is no problem. I'm going to give a recap on that as well. And we're going to cover what a Brexit would mean for Britain, for Europe, for other countries in the world, how it would affect the currencies around the world, including the British pound, and what currencies we should be looking at during, well, today is the day, and after the results come out. And we're going to do a live overview of what's happening in the UK at the moment. We're going to talk about the markets, how the Forex market is actually behaving right now. And finally, we're going to go and head towards the charts and see what possible strategies we could have for our trading. All right, so as you might have noticed already, this is a live webinar. So if you have any questions, just go ahead and type it in the chat box, and I will make sure to answer it during the webinar. And if I don't get to answer it, definitely do submit it to Orbix, info@orbix.com, and I will make sure to answer it then and there. All right, any questions yet? Do you have your pens and pencil and notepads ready? Okay, seems we don't have any questions yet. So what's going on right now? Well, the referendum started earlier this morning in the UK. Do we have anybody from the UK in the audience today? Is anybody voting? All right. Seems like we don't have anyone from the UK. So that's good. So obviously you're not heading towards the poll, but this is what was happening this morning. And the voting is still open. It seems to be a massive flooding going on in the UK at the moment, which has disrupted the voting. And not only that, a lot of people have been facing problems with registering. And just a brief about what has been going on in the UK on the newspaper side. Well, these are two of the main UK newspapers covers today. One of them is basically Camp Leave Independence Day for Britain. They had this on their cover, and the Guardian, though, they're saying, "Who do you want to be?" And they're basically promoting togetherness. So as you can see, even the newspaper and the media in the UK is pretty close in the vote, and it has been so far the same. But in the meantime, the Europe is very for the UK remaining in the European Union. Last night, the symbols of well, here is Poland, here in Italy, every major European country was showing a support of Britain remaining in the UK. Manan is asking, what's your expectation on British pound? Great question. Thank you for asking me that. We are definitely going to have a full coverage on the British pound. I just want to give a little bit of a background for those of you today who want to get a little bit more on what the Brexit is, and this actually helps you with understanding what could happen with the British pound. So far we know that London itself is pretty spread apart, but Europe wants it to stay. So that means that, well, not only British pound, but the euro is going to be affected by the result of the EU referendum today. And as I said before, this flooding has been affecting, and polling started at 7 a.m. BST, which is London time, GMT +1, and it will end at 10 p.m. So right now it's around 6, so we have 4 more hours of voting to go on, and an estimated 46,500,000 people are entitled to take part in the vote. And right now, where we stand, I'm looking at one of the polls from The Guardian. It seems like the Remain campaign, well, there are different polls going on. The Remain campaign is at 41% and Leave is at 43%. But terrible weather across some parts of Britain has affected the count, because by yesterday we kind of had a different polling showing. So the weather might actually change the outcome, which might at the same time. So right now, even 41 to 43 is very, very close. So there is a possibility that we'll see a revote after this if the vote is really, really close. I also wanted to welcome everybody else who is joining us right now. Mohammed, well, that is my name. I believe that is Melissa who checked in with my link today. But yeah, there was a confusion with the timing today, so apologizing for the confusion. I did wait for the webinar to start an hour later so everybody can attend. So you're welcome on that. Anyway, so for those of you who didn't attend our webinar before, what is a Brexit? Well, a Brexit is Britain leaving the EU. People around the UK are going to the polls to vote on that. And so some of the reasons why this debate has been going on is because, well, half of British people think that they are giving more to the Eurozone than what they're getting in return. And to answer the question, there are some frequently asked questions that everybody keeps on asking me. So how much does the UK contribute to the EU, and what do they get in return? And the answer is that the UK is one of the 10 members of the state, and they do pay more into the European EU budget than they get out, but France and Germany contribute more, actually, than Britain. And in 2014, Poland was the largest beneficiary, followed by Hungary and Greece, and that explains why Poland was supporting the Remain campaign last night in Warsaw, as we saw in the pictures over here that had the British flag on their main building in Warsaw. The UK also gets an annual rebate that was negotiated by Margaret Thatcher, and the money back in form of regional development grants and payments to farmers, which adds up to £4.6 billion in 2014. So it seems like they really are even, basically, in going back and forth with the give and take, and that explains why the Leave campaign and the Remain campaign also are voting very close. So let's say this is a very important question, in the case of a Brexit, how long will it take for the UK to leave the EU? And that is obviously going to be important for forex traders to know. And so the minimum period after a vote to leave would be 2 years. During that time, Britain would continue to abide by EU treaties and the laws, but not take part in any decision-making as it negotiated with the withdrawal agreement and the terms of relationship with the now 27-nation bloc. And in practice, it may even take more than 2 years, depending on how the negotiations go. So this basically paints the picture of a very long-term, ongoing discussion, which obviously is going to create volatility in the British pound, but eventually that volatility is going to fade out as people get into a more certain place and the fear is going to take out. And then the volatility is going to come back every time they're going to have a meeting or a negotiation on the terms. And so another question that people ask me a lot is, what impact will leaving the euro have on the housing prices? And housing prices are obviously important for the British pound as well. And that is actually one of the main concerns with the Brexit. And millions of European citizens need to leave, basically, creating a flood of available housing and will lowering the demand for housing. And so this is one of those questions where there is no clear-cut factual answer, but we can say that none of the main players are suggesting the citizens of other European countries will be sent packing after a leave vote. However, there are a host of other variables that have an impact on property prices, including things like interest rates, the general state of the economy, but I expect this to be one of those issues fought over by both sides during the campaign. And finally, who wants to leave and who wants to stay? Well, the British public are fairly evenly split, as we said before. Even today, we're seeing the polls being, I'm going to check back on the polls right now, but the UK Independence Party, which won the last European elections, are received nearly 4 million votes, 13% of those cast in May's general election. They are campaigning for Britain's exit from the euro. About half of the Conservative MPs, including 5 cabinet ministers, several Labour MPs, and the DUP are also in favor of leaving. And who wants to stay? Those are the ones who believe Britain is being backed by the euro, and they say imposes too many rules on business and charges billions of pounds a year in membership fees for little in return. They also want to take back the full control. We'll talk about the why, right? So, so going back to who wants to stay in the EU, the first and foremost in the UK is Prime Minister David Cameron. 16 members of his cabinet also back staying. The Conservative Party has pledged to be neutral in the campaign by the Labour Party, the SNP, and some other European politicians, as well as US President Barack Obama, who wants Britain to remain in the Eurozone, as do other European nations such as France and Germany. And so basically the majority of politicians outside of the UK are backing the Remain campaign, and that is basically pure fuel into British people who really think they are getting more, they're giving more out than comparing to what they're receiving. So the reason why these people want the UK to stay is because they say if they stay in the Europe zone, they'll get a big boost from membership. It makes selling things to other European countries easier, and they argue that a flow of immigration, most of them are young and keen to work, fuels economic growth and helps pay the public services. They also believe Britain's status in the world would be damaged by leaving, and that we are the UK more secure as part of the bloc, the EU bloc, rather than going at it alone. They also try to refer back to why the European Union started even, and that was after World War II. And they wanted to prevent another catastrophic war in the bloc. So those are the people who are backing the Remain campaign. What is happening right now? The polling stations opened 7 a.m. London time and 2 a.m. Eastern American time, and at 10 p.m. we're going to close. The results are expected 12:30 a.m. Friday, and by tomorrow 7 a.m. London time, the votes are likely to have been counted, and the official result is expected shortly after. That is 2 a.m. Eastern time in New York. So we're going to have potentially a ton of volatility at that time. Welcome, Ashley. Thank you for joining us today. So we are talking about Brexit. So who's expecting to win? Again, the poll is changing pretty rapidly. This result, I was just looking at a different poll, but this one from Number Crunch shows that 47% is voting to remain versus 45% who is voting to leave, and 10% don't know. Another poll showed that 41% is voting to remain, while 43% is voting to leave. It is a very, very close voting. But the betting market shows a 75% chance of the UK to remain in the Eurozone. And, well, my gut feeling kind of also says that they're going to remain, but the matter of the fact is that we really, really don't know. So just to answer the question, what your expectations for British pound, matter of fact is nobody really knows, because we do not know the answers. But all we can do is to speculate what's going to happen after the results come out. But one thing that we do know is that there is an interesting resemblance between the votes and the whole campaign right now and the Scottish referendum vote that happened a few years ago. And so we do want to take a look at that because we can learn from what happened before to basically use it in our favor. So for the second time in the less than 2 years, David Cameron, Prime Minister, went into referendum day. And the fact is that Scotland did, in the end, vote by a 55-45% margin to stay in the UK, partly explains why opponents of Brexit reach for the 2014 political playbook. And so at the time, Mr. Cameron claimed that remaining in the EU offered the best of both worlds, and he's obviously in the Remain campaign, but the Scottish referendum was far from an unambiguous victory for supporters of the UK unity. Majorities in the cities of Glasgow and Dundee actually voted for independence. that would have been almost unthinkable when the Prime Minister approved Scotland back in 2012. And as for the warnings of financial pain, campaigners for Brexit were able to basically blunt the effect of that by portraying them as being as a part of a project fear, just as Scottish nationalists had done before. But perhaps the most important lesson from Scotland was that the naivety of expecting a referendum to take the sting out of a long-running political debate, and the overwhelming rejection of independence might have at least pushed the issue down the political agenda. This year's hard-fought campaign over the EU membership has instead turned into a conservative internal feuding that pushed the Remain campaign and Mr. Cameron to promise more into an open civil war. So with this, what we've seen so far last week, something that actually really changed the sentiment and the momentum in the markets was first and foremost a tragedy that happened in London. The MP Jo Cox was assassinated. She was somebody who supported immigration. She supported the Remain campaign. And she was assassinated by somebody who was on the Leave campaign. And that really shifted the momentum in London from Leave voters to Remain voters, because they just realized how chaotic this whole campaign is getting. And with that, we actually saw a shift in the British pound as well. And as you can see in the pound yen, for example, we saw a shift right after assassination. And pound dollar also basically shifted immediately after that. So that basically shows how much effect this whole campaign has been having on the British pound. And what else we've been saying has been George Soros, who said that Brexit is basically going to doom the UK economy if it happens. And we really can't back our strategy based on him, because he probably is just saying he has not been correct before, and he might just be long on the British pound, and that's the reason why he said that. And there are some analysis from Citi actually that says George Soros could be wrong on Brexit and UK economy. And, well, he basically said that a Brexit vote will lead to a damaging 20% fall in the value of the British pound. And he said that the depreciation would be good for the UK economy. But some researchers are noting that a reduction in the value of British pound would be as beneficial as it was during the period after Black Wednesday in September 1992. I wasn't really a trader back then, but that was apparently when Soros' speculative attack on the British pound drove the UK out of the exchange rate mechanism. So not everybody is taking that seriously, but again, it's something to keep in mind, have an eye on. And the main currencies that have been getting an impact from the recent volatility, well, has been obviously the British pound, the euro crosses. Japanese yen has been very dramatically impacted by the campaigns, and it's been weakening dramatically, at least up until yesterday. And the U.S. fears basically comes on a Brexit outcome, and we've seen basically weakness in the past week on the US dollar and Japanese and strength in Japanese yen continued until last week, and then it started to weaken as the British pound started to get stronger as the sentiment shifted to a Remain vote for across the media. So let's go back now to the charts and see what we can tell by all these fundamentals that I just covered about a potential Brexit or a lack of Brexit. Apologies for that. What I would like to do. So let's start from scratch with the British pound versus the US dollar. This is the naked chart of British pound, and I wanted to show you before I add on the indicators and the channels and trend lines. So what has been happening is that the British pound versus the US dollar, the minimum it's been in the past, 16 years, right? We don't even have the result from back in 1992 that I just mentioned. But in the past, at least 16 years, this is the lowest that the British pound has ever gotten. So 1.36, but this time the bottom out for the pound seemed to be at 1.39, which we actually talked about in our previous webinar and on my Orbix videos, as well as on Investiva. So this was basically where this time around the British pound bottomed out, and so this was back in February, and then it was followed by a bullish engulfing, and since then we've had incredible volatility since the referendum and the Brexit talks started. And in April, even though the pair tried to reach back to 139, it ended the month on a bullish note, and so did this month. Well, so far we have seen a great amount of movement on the British pound. So let's zoom back in on the dollar pound dollar. So here's where we started. Back over here, right? It tested all the way back here, and we had a very massive doji candle right over here, followed by a bullish engulfing. So this is called a morning star candlestick chart pattern, which is an indication of a reversal under normal circumstances. But right now, obviously, is not a normal circumstance, and we really the outcome could rely more on the fundamentals rather than the technical analysis. However, if the EU referendum votes to stay in the Eurozone, that will basically back up a further bullish outcome. One other reason why, so we so far talked about one of the reasons why the sentiment changed right around here, and we turned into a bullish sentiment for British pound. One of the reasons why was the assassination, but also it could be one of the other reasons why is that the Brexit talk started right around here. We had a break below the Ichimoku cloud, and it went all the way here. One of the major discussions on the pound versus the dollar was that, well, a Brexit outcome might have already been priced in the forex market. So people who were fearful of a Brexit, and every time we saw the polls to lean towards a Brexit outcome, the British pound started to go lower and lower and lower. And over here, again, we're seeing more sentiment, especially on social media, of people supporting the Leave campaign. And once the assassination happened, the sentiment changed. But everything that we're seeing here is based on speculation. And we are already in the all-time low zone. Even though, well, the zone is basically from 139 to 136. We didn't quite reach 136. And quite frankly, if a vote for Brexit happens, personally, this is not a trading advice, but personally, I don't see the British pound to fall below 136, which is the 20-year low for the pair, right? So far we've been seeing the pair being pretty bullish, and this morning we saw a little bit of a pullback. We do have a break above the Ichimoku cloud to back us up. So now let's say with British pound versus the US dollar, what's going to happen if we see a vote to remain? Well, I would say we're probably going to see a further British pound rally, especially tomorrow on Friday, but it could fade away pretty rapidly as we enter the U.S. New York session. So we're going to get the results 7 a.m. GMT, London time, GMT +1 on Friday. We will see massive volatility. Well, depending on the result, we could see in case of a Remain campaign to winning, we could see a spike even above 150 if we actually a little bit more back in and use a different Fibonacci, which is, well, my students in Investiva know that I'm a big fan of combining Fibonacci and Ichimoku. So if we do this, basically one of our highest resistance levels could be even 158, right around here, which on the monthly chart falls right in the middle of the Ichimoku cloud, right? So we're going to point out these levels that you want to keep in mind. So one of the strategies, again, tomorrow, I still don't recommend anybody to be trading the British pound, but we have seen a sentiment change in a case of a Brexit. We could see the change to continue. So far we've had a massive testing of the market, but tomorrow we could see the pair to move to either of these Fibonacci retracement levels. Obviously, so what happens if the Brexit if a vote for Brexit is coming up? Let's take a look at the economic calendar and see what else basically we have coming up tomorrow. So tomorrow, obviously, today is the Euro referendum. We've had better than expected results of data in the US. However, this has not been helping the pound dollar because the pound itself has been so strong that the pound dollar pair has been actually going up. As you know, when we're trading currencies, the first currency pair is the leading currency and as the British pound gets stronger and the US dollar gets weaker, well, the pound dollar pair will go up. Today, even though the US dollar, well, must have been getting stronger because of the economic data, but that has not been the case versus the British pound, at least. Versus the US dollar versus Japanese yen, we've been seeing the US dollar up a little bit, but that again versus the Canadian dollar, it has been going down. So that just shows that the US dollar itself has been very neutral, and this Japanese yen basically has been getting so weak on the shift in the market sentiment that all the Japanese yen crosses actually have been moving. So US dollar basically has been on a wait and see situation right now to see what the outcome is going to be to decide which direction it wants to go. So with that, obviously the US dollar has not been able to prevent the British pound from rallying across it. And in case a Brexit does happen, as I said again, we could see a drop back to 139 or even 136 in an extension, and the volatility could fade out at around the beginning of New York. So do we have any questions up until here? All right, so we got a question. Will the volatility continue in the following week? That's a great question. Thank you for asking. The volatility, well, if a Brexit happens, I believe the volatility will definitely continue on Monday throughout the week. But if the Remain campaign wins, the possibility of continuation of the volatility is a little bit lower, and that is when you can, if you are a position trader or a long-term trader, that is when you can count on building your strategy up a little bit more for a long-term point of view. So it really depends on the outcome, and if the vote for Brexit happens, then we want to see what are the terms, and if there is going to be a revote in case of very close voting for between the Remain and the Leave campaigns. All right. So without further ado, let's move on to the next pound cross, which is the pound-yen pair. We briefly took a look at this one as well. The pound-yen has been very interesting. Let's actually switch back to over here. So the pound-yen on a monthly basis, as you can see here, I've already inserted the Ichimoku cloud. And the pair on a monthly basis actually tried the bottom of the Ichimoku cloud, but was not able to break below it. So then again, from a technical point of view, this is a significant bullish signal. However, we're not done with the month yet, right? In an overall run, we can see that while the pound yen was in a very sharp rally right up until 6 months ago, it continued until right over here, which is, well, a year ago. It started to, is this the pound? Just want to make sure on this one. Yeah, so up until August, we had a very sharp rally on the pound yen, as you can see in these both charts, and then we had this massive drop, right? But it has not been able to break below the Ichimoku cloud on the monthly chart. However, if a Brexit does happen, so the pound yen actually is a perfect currency pair for the scenario, because as the British pound or as the talks of a Brexit heated up, the Japanese yen became more and more of a safe haven. And that basically creates a perfect currency pair. We will get a strong currency, which is Japanese yen, versus a weak currency, which was the British pound, right? But then the sentiment changed, and now we've got, as the British pound gets stronger, the Japanese yen gets weaker across the board, and that has basically made the trends in the pound dollar that much more strong. However, as we can see on the daily chart, the pound yen does remain below the HMO cloud, right? It did test above the HMO cloud exactly like the beginning of the month, but well, this month has not been a normal month. That didn't last long, and right now we can see that the pair is really trying to break above the thinning Ichimoku cloud. One other thing that you do want to keep in mind with pound yen is this channel that it has been basically trading within. This channel. Actually, this one right over here. So this could be our lowering resistance level when it comes, support level when it comes to pound yen, right? It didn't quite reach though. It didn't quite reach the lower resistance level. So this probably would be better in a moving average. Here we are. This is our support level for pound yen, right? And as for the resistance, we have 165, 176 even. So again, in case a Brexit does happen, we could expect the pound yen to really drop, break below the Ichimoku cloud on the monthly chart, and drop the resistance. The support levels are set at 148, right around here. And the next, actually, we could even see, well, the Fibonacci doesn't really help us with this, but as you can see, this 148 level is a very psychologically strong level as well, because it was tested right back in the year 2000. It was the low or the neckline of this double top back then. It was tested again this month. It was not able to break it below it, but in case of a Brexit vote, we could see a break below that, and in that case, we could set our bearish target to be somewhere around here, a previous high turning into a support at 135. So really keep your eyes open. With pound yen, there is actually a possibility. While with pound dollar, this basically is the all-time low. Pound yen, we could see a little bit more of a possibility of a downfall in case of a Brexit. And the reason for that is with pound dollar, if a Brexit does happen, both the British pound and the US dollar will get weakened, and that will create kind of a struggle for the pair to really move into any direction, because a Brexit is equally as nerve-wracking and well, will create as equal amount of uncertainty in the US, not as it will in the UK, and that is why pound dollar trade would not be really ideal in case of a Brexit. While again, if the Brexit does happen, it does not happen, though there is a more possibility of a rally on pound dollar, but then again, pound yen rally could be stronger than a pound dollar rally, right? And next, we're going to take a look at one of our other favorite pairs, pound crosses, which is the euro pound. So this is again tricky because a lot of people, well, euro obviously is one of the main characters in this referendum, and with all the a lot of European countries voting or backing a Remain campaign, obviously they believe that Brexit vote could affect the Eurozone in a negative way. And for that reason, a lot of people are, well, they would expect the euro to drop versus, well, across the board in case of a Brexit vote. However, again, because both British pound and the euro are equally exposed to this referendum, it is a little bit harder to do the fundamental analysis of euro pound, whereas a fundamental analysis on euro dollar, because as we can see, as the sentiment shifted towards the Remain campaign winning, the euro has been getting stronger today, kind of following the path of the British pound, a little bit weaker, but kind of, right? While the euro versus the British pound itself, daily chart, is actually completely neutral. And why is that? Because both the euro and the British pound, they're basically pulling the pair as they're equally as strong or as weak. And we've been seeing 3 consecutive, well, these are not dojis, but these are spinning top candlestick patterns in the past 3 days. While, well, when the Leave campaign was stronger, we were seeing a little bit more of a drop in euro pound. But technically speaking, as I said, a vote of a leave for as a result for this referendum will really make the fundamental analysis of this pair difficult. And I would really rather just rely on the technical analysis for this. And it really depends. Again, the next trend will appear based on the terms on a leave vote if it happens. If the Remain campaign wins, again, because the British pound, some people, a lot of analysts believe that the Brexit vote might have already been priced in the British pound, we could see the euro to get actually a little bit stronger in the case of the Remain campaign winning, and we could see the pair backing up. So we have the pair right now basically moving between the pivot zones at 0.79 and 0.76-ish, which is the 38% Fibonacci level. But it does remain below the Ichimoku cloud. And in case of a Brexit, we could see the pair dropping back to 0.74, right, as a support level. And in case of a Remain campaign winning, well, then the pair would have this thick Ichimoku cloud to break above, which seems like I would say this range basically between 0.79 and 0.74 would be the levels that you would want to keep an eye on. But then again, between this and pound yen, I would recommend a focus more on pound yen rather than euro pound, because these two currencies are equally exposed to the result, and they are likely to move in the same direction rather than, well, the pound versus the Japanese yen, where they will be moving in the opposite direction, which will make for a better trend-making opportunity, right? So on a monthly basis, euro pound is kind of correcting towards the 50% Fibonacci level in the long run, since it broke below the Ichimoku cloud back in 2013. So the question is, will the Fibonacci level, retracement level, hold. And so far, it has been pretty successful at that. So the idea behind Fibonacci level is that when you find a trend, there's a possibility of the prices to go back to one of the Fibonacci retracement levels, which we have definitely seen over here, and then the market will continue going back down. Right now, we're seeing this massive spinning top on the monthly chart, right at the 38% Fibonacci level, and the momentum seems a little bit more bearish than bullish over here. And with the Euro pound, I would really start looking back at it next month to have a more certainty in terms of its direction. Because if July starts with a bullish candle, that would really be a reversal. And then again, of course, if this spinning top remains a spinning top, that will be a very solid bullish reversal signal. While if we have another bearish candlestick following this, we could see this as just a correction, and where the Euro pound will continue moving downwards, right? And the long-term support with the Euro pound is basically the 0.70 right over here. So the most important thing so far with all these pairs has been the shift in the market sentiment in the past few days, and it is very visible that the euro and the pound are moving in the same direction, while the pound and the Japanese yen are moving in an opposite direction, and it's basically corrected all the downfalls in the past 4 days by itself. And just reviewing the pound versus the US dollar, we can also see vividly the change in sentiment. And sometimes, so this is the tricky part, sometimes you want to go against the sentiment. So right now, if you look at the market sentiment on different brokers, you can see obviously that the majority of the traders have shifted from selling the British pound into buying into it. But sometimes this just could be the end of a rally, and people would just give up and start selling the pound after the results are out. So again, these are very, very risky times when it comes to British pound. Lastly, I would like to take a look at the pound versus the Swiss franc. So again, this is the monthly chart. It hasn't really been making any sort of a trend since the financial crisis of 2008. Has basically been moving, so the resistance has been moving up. I'm sorry, the support has been moving up. The Ichimoku cloud is flattening out, while it has turned a little bit bullish over here, and it has been testing the support. It has not been able to break above it, and it's basically moving within this channel, which looks more of a wedge actually. So Swiss franc may probably get the least influence from a Brexit, because they're neutral. They really don't care what goes down in the Eurozone or in the UK. So the pound-Swissy pair could really be driven by the British pound itself, right? So again, in a case of a Brexit, we could see the drop to come back in the picture. The drop that we saw from at the beginning of June up until here. So this is very similar to, what does this resemble? The pound dollar. So the US dollar and the Swiss franc are pretty much neutral so far, have been pretty much neutral, while the US dollar will start moving and shaking if, in case of a Brexit vote, the Swiss franc is likely remain neutral, and with that we could see more of a volatility in the pound versus the Swiss franc. If the vote for remain goes through, we could see the pair to move back up. And in terms of the levels that we could see, they're used Fibonacci again over here to see what levels we want to take a look at. Right? So here we have, well, the 50% doesn't. Right. So the 50% was, this zone was contested before last month exactly, right? So in case of the main camp winning, we could target, well, tomorrow that is, right? Any of these Fibonacci retracement levels versus Swiss franc. But so one thing that I actually forgot and is incredibly important, and I apologize for forgetting to say that, is that today and tomorrow the markets are going to be incredibly illiquid. That is because a lot of brokers are trying to protect themselves from a potential volatility. They have made their required margins higher, and they're not going to rely on liquidity providers to create liquidity, because what happened last January, the Black Monday on January 15th, a lot of brokers lost money on the sudden drop of Swiss franc. The sudden strength of Swiss franc, sudden drop of US dollar Swissy, and so they're really trying to prevent any kind of losses during this very volatile times. So there is a chance that even if you do try to take advantage of the referendum or trade the volatility, there is a very good chance that you're not going to be able to get into a trade. So if you do if you are really eager to trade the outcome tomorrow or the volatility upon right before the results being published, definitely keep that in mind. Use sensible leverage. Don't go too crazy on the leverage because then there's going to be a good chance of you getting kicked out of the trades or not even being able to get in it, or losing a lot of money due to the volatility and the illiquid market. So the Forex market normally is known as the most liquid market in the world, but right now it really is illiquid, and getting in and out of the positions could be pretty risky. So do your risk management calculations. Probably one of the good ways to get, a lot of people right now are trying to take advantage of a shorter term volatility. For example, if you look at the 1 hour chart, well, yes, I've seen people who are trying to get over here and get out, just making a few pips, but chances are, because you're not going to be able to get out of your trade, even if you do make 50 pips, then you're going to lose 100 pips after that. So keep that in mind, and definitely don't go crazy on leverage, because the brokers are also trying to, protect themselves from the volatility in the market. But good thing that I switched back to the hourly chart. We obviously have broken above the HMO with the pound Swissy, which does portray sort of a bullish signal. And over here, after the uncertainty spinning tops, we're seeing a little bit more of an uptrend. So as I said, tomorrow upon the results, and in case the Remain camp wins, pound Swissy and pound yen would be your best bets for a bullish trade, while a leave campaign really is going to be incredibly uncertain. I won't have any sort of strategy as of now. It really depends on the outcome, how close the vote is. Is David Cameron going to call for a recount? So a lot really will be at stake if the vote for leave is higher. So basically, I would say my recommendation, it's not a trading recommendation, is that really be careful if of the results. If you are trying to trade it, trade the Brexit in a long-term strategy. We could see, in case of a Remain campaign vote, we could see more rally in the British pound. But the other way around is really, really uncertain. I did mention calculating your risks, and well, this is not a risk calculation webinar, but I do want to point out that at Investiva, I am launching 2 new courses for wealth management and financial planning. Everyone who trades the Forex market needs to understand financial planning, needs to understand how much risk they should be taking, and it is very personal. So far I've been having private coaching to just basically go over the financial plans of individuals, but due to lack of my time and not being able to compensate every single person, we decided to go on and create a new course. We are going to start the waiting list count on investiva.com. I definitely do recommend that you go ahead, sign up over here so you know when our new products come out. Another very exciting new product that we're going to launch very soon, actually, that is going to be our first product, is our weekly signals by one of the notorious Wall Street insiders, Rick Bensignor. We're going to partner up with him, and you're going to receive weekly insights from him. We already have insights for free, obviously, on must-reads page of Investiva, but well, right now is actually media. However, that is going to be really exciting. It covers not only Forex, but other financial markets as well. So definitely go ahead and sign up on investiva.com if you're interested in seeing our new products. We're very excited about them. And of course, if you are a beginner in Forex, definitely check out my book on Amazon that was published a few years ago, and it still remains one of the most favorite books for beginners in Forex. If you want to receive my daily comments and videos and my personal trading journey, definitely do follow me on Twitter at Kiana Danielle at Investiva, on Facebook at Investiva. I mostly post about investing, while at Kiana Danielle I mostly talk about our private, a little bit more of a personal updates. Also, you can find my videos on YouTube at Investiva, as well as obviously Orbix, where I provide the weekly, twice a week we provide the economic calendar, as well as a little bit of a technical analysis. So here we are open for questions. I do wish you the best of luck trading, especially today and tomorrow. Watch out for the results. Don't go crazy on leverage. If you have any questions, definitely reach out to info@orbix.com. We do have another webinar coming up next week at the same time. Next week I'm going to, we already will have the results out. So next week we're going to focus on the Euro crosses. It's going to be a very interesting week, especially if the vote for Brexit wins tomorrow. So definitely make sure to come back with questions. I always appreciate any questions that are submitted over here, and I hope you enjoyed today's webinar. Come back again, and have a great weekend. Oh, yes, to answer your question, this webinar will be recorded, and you will be getting a notification for the recording if you're interested. All right, great, everybody. You are very welcome. Thank you.